Now, I want to talk a little bit about a very interesting bipartisan alliance that might be forming in the Senate. So, Josh Hawley, he is a senator from Missouri, has proposed an 18% credit card interest rate cap. He's a Republican, and he wants to cap the rate that credit cards are allowed to charge for interest. Now, he is introducing this legislation What's so interesting about this is that Bernie Sanders recently, with AOC as a co-signer in the House, proposed a very similar piece of legislation that would cap interest rates for credit cards at 15%. Josh Hawley says the government was quick to bail out the banks just this spring. He continued, referencing the now liquidated Silicon Valley Bank of California and Signature Bank of New York, but has ignored working people struggling to get ahead. Setting rates on credit cards, then, the Republican said, would be a fair and common sense way to give the working class a chance. And I think it's so interesting that there is now this possible alliance between Josh Hawley and Bernie Sanders, where this is a very liberal, very progressive policy that we could really look at and say, okay, we can form a populist majority and really have this bipartisan solution.
Yeah.
And, this is the type of bipartisanship that I want to see. Bipartisanship that's going to benefit the working class.
It's funny. This is exactly the type of thing that a partisan news show wouldn't report on.
Right? Exactly.
Because it doesn't help either side.
It doesn't stoke the anger.
Exactly.
Right? What is the incentive of a Fox News segment to say, oh, look at Josh Hawley and Bernie Sanders having a similar alignment? What's the benefit of MSNBC tying Bernie Sanders to Josh Hawley? Mm-hmm. There isn't any. If your goal is to stoke partisan anger.
Yeah.
Because that isn't the goal of the show, we're able to see, wait a second, there's a lot more crossover than you think.
Yeah.
Whether or not you're in favor of the interest rate cap for credit cards is a different thing, but it is interesting to see that there is a bipartisan alliance over some of these more working class issues.
Yeah, there is kind of there's a horseshoe effect here, right? Where as the sides get further out from each other, they actually start to get closer in some areas.
Exactly. Now, what is the effects of an interest rate cap on credit cards? I think I am fairly in favor of capping interest rates at a certain percent. For the majority of the history of the United States, most states limited interest payments at 6%. From 1776 up until the 1900s, basically all interest was capped at 6%. In the early 1900s, more deregulation started to happen in a couple of the states and raised the cap to 11 or 12%. The next big event happened during 1987, when the U.S. Supreme Court decided that national banks can export their state interest rate law to other states to do business. So because South Dakota eliminated its interest rate cap completely, all credit card agencies moved in, based themselves in South Dakota, and then were able to export this interest rate free cap to the rest of the United States. So this is a fairly new development in the history of the U.S., starting in 1978. Before then, this was not something that really happened, right?
Do you think, was that because the government was worried about taking advantage of these consumers to this extent?
It was actually a mixture of two things. It's a little bit of consumer protection, but it's also very religious. America is a very Christian nation.
Yeah.
And that makes us very anti-usury. Mm-hmm. And, we do not like the idea of this type of money exploitation from a religious perspective. So a lot of the most religious parts of the country were the ones who had the highest usury laws, which are now the most Republican.
Which is so funny because we're talking about like populists, right? Coming together a little bit. The fact that kind of really hardcore liberals come together with highly religious people on not wanting too high of interest rates is also interesting.
No, it's so interesting. And I think, again, this is a great working class majority that can be formed here with poor working class religious people and poor urban, younger, not so religious people who are having similar struggles across the country. But there is something to be said about the effects of capping credit card interest, because the truth is it will lock some people out of the market completely. Some people who do need access to credit won't be able to get it if the credit card company can only charge 15% interest. The only way that the credit card can fathom giving money to a person of high credit risk is if the interest rate is 30% and they make money off of that person. Is there something wrong with the business model that we just outlined? Possibly, right? Is there something wrong with somebody making money off of someone else's continual economic desperation? Yes.
Well, this becomes really interesting to me because it's like it becomes a really systemic, like really quickly as I think about it, it becomes a super systemic issue because I generally I don't want people to have to borrow money at a 30% interest rate.
Right.
But what if they need that money to buy food after not eating all day yesterday because they didn't have the money for it? I want that to be able to happen.
Well, then this is what gets into it. This is the effect. So now when you take away that 35% credit card that somebody might need to feed a family or something, they are more likely to go to third-party, non-reputable sources for that loan.
Yep.
Whether that be a payday lender or, what I'm more interested in this case, pawn shops. So the IMF did a study about Cambodia's recent interest rate cap. And the IMF was looking at the effects of the number of pawn shop provided loans before and after the interest cap went into effect. And after the interest rate cap went into effect in 2017, loans provided by pawn shops jumped from 40% all the way up to 160%.
Not percent. 40.
Oh, sorry.
Yeah. 40 million US dollars. They quadrupled to 160 million.
Thank you. So the pawn shop was now absorbing that credit that people couldn't find. And the rates charged by the pawn shop could be worse than 30%. In the United States, if you go to a payday lender, you might be charged an annual APR of like 200% interest.
Wow.
If you take out a payday loan.
Oof.
Now, and I will say Bernie Sanders' bill also attacks the payday loan industry and caps their interest as well, limiting people's ability to get at these certain loans.
That does say to me, like, these people just they're not going to get any loans.
Right.
Right. Because how desperate do you have to be to go into one of those places and ask for a loan? Everybody knows that payday lenders are there to prey on the desperate.
Yeah, I mean, that's like the whole idea.
Yeah.
Now, what I found is that these payday loans, specifically in New York, don't actually go towards food most of the time. Most of the time, these payday loans do go towards alcohol.
Okay.
Most of the time, these payday loans, like areas where payday loans are directly correlated with more
drug use.
No.
Oh.
It might be, but that's not what I'm trying to say.
Okay.
The stores around them will see an exponential boost in business after a payday loan store opens up right next to it.
Okay.
So it's like this convenience factor, and they don't really recognize what they're doing. I don't believe that it's an out of necessity thing. I think it's the availability of it.
Interesting.
Yes. That's how I view it. I might be wrong, but I do know that it's highly stores that are next to payday loans are highly correlated with increased money or increased cash flow.
Okay. Yeah. This is where like
it gets too into the weeds.
I don't have a knowledge base, so like I'm speculating, but I would, from very anecdotal knowledge, I would think that they're convenience stores, they're liquor stores that are generally in these areas.
Yes.
So it does make sense, and in that case, I kind of am. I mean, like we just talked about how for the child tax credit, right? Joe Manchin makes the argument that people are going to use that money and go buy drugs and alcohol, and they don't, which is why we think that people should be given the child tax credit. Well, if we're seeing that for payday loan places, people use that money to go buy alcohol and drugs, then yeah, I am okay with capping interest rates so that those places can't prey on people who are using the money for these unproductive, self-harmful purposes.
Yes. And now my opinion on this will probably change based off of that data.
Yeah.
From what I've seen is that the payday loan taken out most likely and most frequently gets spent on consumables that are not beneficial to human development.
Yeah.
Okay. If evidence shows to me that changes that, then my opinion may change based off of that information.
This is also an example of a policy. The reason that I said that I think it's so systemic is because it's a policy that seems to work really well with a more robust safety net.
Yeah, totally.
Right? Because if you already know that people are supported in their payments for their housing and their payments for food, then you don't have to think about the contingency of what if they need this money to buy food for their family.
Fantastic point.
Right? So if you have that strong safety net, absolutely lower these interest rates, right? Don't allow these payday lenders and other just normal credit card companies to prey on people like this.
Yeah, I mean, 30% interest on a credit card is pretty standard for a young person. That was my interest rate for a long time.
Totally.
You know?
Totally.
I want to read this one paragraph from the International Monetary Fund study. Abusive and irresponsible lending practices, such as lending without prudent regard for repayment capacity, deceptive terms, and unethical repossession techniques often cause more damage to poor borrowers than high interest rates. Further protecting consumer and preventing household indebtedness will require lender discipline and financial literacy among borrowers. That's a heavy lift. This will also require strengthening consumer protection law enforcement. Yep. A solid regulatory framework is needed in order to avoid regulatory arbitrage amongst the different players, such as microfinance institutions, pawn shops, as we've talked about, and informal money lenders. This is to ensure more transparency and healthy competition, which helps improve efficiency and lower interest rates. But the main thing that I like here that I think is important to recognize is that the term when they say unethical repossession techniques often cause more damage to poor borrowers than high interest rates per se. Right? So what they're saying there is all of the real negatives of defaulting on this debt is actually worse than not having the money at all.
Yes. The interest itself isn't the problem.
Yeah. Yeah. So going forward, it ends like this. Going forward, if the interest rate cap is to be maintained to protect consumers from usury rates, the non-binding cap coupled with stronger consumer protection safeguarded seems to be a better alternative. And I think that's what Bernie is pushing for in his bill by going after the loan sharks and the payday lenders specifically. The pawn shops is a different beast. I don't even know how you would go about regulating something like that. That's so difficult.
Yeah.
I mean, that gets granular there. But maybe that just means it's a human desire to go into debt. I mean, I don't know what that says about us. But it is something that I want to stop. I do not think credit cards should be able... Again, this is a new experiment. 1980s is when this all started.
Yeah, I don't even think about it as a human desire to go into debt. I think about it as a human desire to do things, to start things, right? Regardless of whether you actually have the means within societal bounds to do them.
Yeah.
Yeah.
Yeah.